Bob Collymore, CEO of Safaricom. I think this is the 6th time we've sat here, and the first time we sat here, Bob, your share price was at 2 shillings and 60 cents. Today we're at 17, Bob. So firstly, let me just say, what a journey. I don't think there are many people who've created that kind of value over that period anywhere in the world. So congratulations.
Thank you. I think the team has done a fantastic job.
Yeah.
I'm really proud of what they've achieved in the past year.
It's a phenomenal achievement, really is. If I can go into these full year results and just break it down, you know, voice, it's come down to about 50% now of total.
Just over 50%, yeah.
When we first started speaking, it was close to 80, I think.
Yes, yes.
And it's still posting a pretty substantial gain. I mean, you know, just below 4% in terms of revenue. Yeah. What's the story there? What's happening?
4% growth is pretty good. It picked up in the second half.
Yes.
I think it's a combination of things. If you look at voice, our blended price on voice has actually declined, I think, by something like 14%.
So you had more usage.
So we got more usage, but also the way we've configured the pricing has helped. And of course, we brought a lot of customers in. You know, we have grown our customer base by just under 8% in the year. So we're just over 25 million. So more customers, you know, reduced blended pricing has helped drive voice.
But you know, I once called you a really good yield manager, because what I noticed whilst you're going through those presentations is actually the prices went lower across the board, it seemed to me. Right, but you drove up usage. It seemed to be a trend you managed to do across all the business lines.
Yes.
Would you say that's a fact? You're very good at doing that.
I think it's tight management.
Yeah.
Which is important. So we haven't allowed costs to run away with us. In fact, the growth in costs has been below the growth in revenue. And you know, I would say it's this year the big change for us is to move to this regional structure.
Yes.
And to empower the people at the grassroots to do the business.
You made an interesting point, because I remember you came back when you were anointed a Maasai elder, Ole Collymore, and you were very enthused that day. You were telling me about Narok and the visit. Why don't you just tell people quickly what epiphany happened and what you're mentioning, that you've got regional CEOs now?
At the beginning of last year, I started a tour of the country because I had a funny feeling that we were kind of losing touch, and you know, I watched what's happening on social media, and there was a sense that we were kind of losing touch with our customers. So as I went around, you know, our people were telling us that we were out of touch. Our network rollout program was being driven from Nairobi. But when you get into Kisumu, you realize that the Nairobi guys decided to put a cell site in the middle of a sugarcane plantation, maybe. And so by listening to my people, it was clear that we had to, I don't like to use the word devolve, but in the absence of a better word.
You said localize.
Much more localization of decision making on where the rollout was going to be, where the shop positioning was going to be, what the offering in the local region has to be. And so that's made a big difference, and we've really seen customer acquisition pick up as a result of that local. You know, there's some regions that will tell you that if you want to do an activation, you have to do it at night. Now, we wouldn't think about that here in Nairobi. Yeah. So these were the things which the local leadership team were implementing, and it's made a big difference.
Bob, you know, you mentioned a couple of times about big data. You know, you've got a phenomenal pot of data here, right? I think you know practically everything about us via the phone. It probably is the deepest insight that we have in this. Are you now leveraging that? You touched on this, but I didn't get a clear idea. You're talking about leveraging your big data. How does that tap into this localization theme?
I was with Dominic Barton last evening from McKinsey. And we were talking about this big data stuff. And I think we concluded that it's a bit like having a room full of books, but it's all just piled on the floor. So all the information is there, but we don't know how to deal with it yet. What we've done is we've recently introduced a tool which gives us cell site information. It gives us, so I can look at your number. If you complain about the quality on your line, I can look at your number and I can tell exactly how your line has performed. Furthermore, it's we've got a predictive tool which will help us to understand the net promoter score by an individual customer, because we can look at a number of metrics which will give us an indication. And when we really start to leverage this thing properly, and we're not there yet, this year is the year for really getting into it. When we start to look at this thing properly, we'll be able to predict when your phone will fail. We'll be able to predict within a few weeks of your phone failing, because we can see a different pattern. And if we can aggregate and then disaggregate in order to give you a service which you specifically, Ali Khan, wants, I think we'll be in a much, much better place.
So you see much more personalization.
Much more personalization. And again, coming back to my conversation with Dominic Barton last night, I said to him, as he speaks with CEOs around the world, on a scale of 1 to 10, how good are we generally at leveraging big data? And he says probably about 1.5.
Really?
And I said, we're not even yet at 1. But the tools are there, the information is there. And in some ways, we've leveraged what I call small data.
Yes.
So we've used customer information with the customer's permission to determine their credit score. So if you want to take out an M-Shwari loan, you actually give us permission, because this is in terms and conditions, to share with CBA a number of things about you. And that helps them to determine what your credit score is going to be, and that has resulted in CBA achieving a non-performing loan, which is the default. Defaulting on loans is less than 2%, which is much, much lower than the
It was
industry
interesting,
average.
when I was speaking with Joshua, he called it algorithmic banking. It's the way he termed it. And
he uses bigger words than me, because he's smarter than me.
But I thought that's an interesting...
It is exactly that. And so we work with him to provide our inputs into that algorithm.
Yes.
And then he puts his inputs into the algorithm, and he can figure out with a much more precise level of accuracy the probability of you defaulting on the loan.
Yeah. Can I go back to the numbers? We talked about voice, SMS. Now, SMS, Bob, you've posted a 10.6% increase, double digits. SMS, I mean, the world over, people have called it a dying messaging system. I heard about Mpesa kicking off in August. Is this a serious J curve that kicked off in August that took you into the double-digit range?
No, I don't think so. I don't think so.
What is behind this phenomenon?
Well, I mean, the first thing is we try not to listen to some of the things the rest of the world is saying.
Yes.
Because the rest of the world said that voice
was dead.
Voice is dead.
This was years ago.
Yeah, I know.
Yeah.
And now you're still seeing a 4%. I must confess that even I was a bit surprised by 4%.
I think that 4% is a huge result, really.
It's a pretty good result.
Yeah.
It's a pretty good result. But I think with SMS, don't forget that our penetration of smartphones is still only about 8 million.
Yeah.
So it's 8 out of 25 million. So there's a lot of people who still don't have a smartphone and therefore don't have the luxury of switching across to WhatsApp.
Yes.
The next question should be, am I worried about WhatsApp?
Yes.
And the answer is absolutely no, because what we've seen
is
the growth of data by people who are using WhatsApp has more than compensated by...
So just to explain to people, if I download a video and I send it across, you're actually getting paid on the data.
I'm getting paid on the data usage, yeah.
So this whole theory that WhatsApp was going to kill this business is nonsense, because we're sending more and more rich data across, right?
Yeah, we think so. And, despite all the criticisms we get about fighting competition, well, we do fight with competition, of course. I mean, that's what competitors do. But we try and embrace the inevitable. And it is inevitable that over-the-top players will come into the market, will take voice, will take messaging. And so, we just find a way of working with it. And the way we find to work with it is to become a much better lubricated pipe, if you like, for delivering that service. So by investing in 4G, 467 4G sites, delivering speeds which can be up to 50 Mbps, depending on where you are. So if you're going to do that, then it's easier. If you're going to use WhatsApp, it's easier to use it on the Safaricom network because you get a much better experience.
Let me go to M-Pesa, which the two interesting stories. I mean, this is obviously a global brand, M-Pesa. I think you were explaining to us that it ranks pretty close to Safaricom itself on the delight scores and all those scores. And it's been a huge driver of financial inclusion, notwithstanding the fact yesterday I saw the South African group, Vodafone, say that it hasn't worked in South Africa, but it's working great guns here, right? I mean, if you look at your numbers, revenue up 27.2%. 41.5 billion. The sheer volume of money that's going through that system is phenomenal. Contextualize what's happening for me in M-Pesa, how well it's done, with what's happening in the banking sector as well, because we've had a very uncertain period in the banking sector. Has more money flowed into M-Pesa? Has less money flowed in? What's happening?
I don't think I'd say that we've seen an impact from the banking sector, and I don't want to comment on the banking sector because they've got their own dynamics which I don't understand. But we've always said that we had a lot of confidence in M-Pesa, and as new competitors have come along, people said, well, now M-Pesa is dead, and we've always said, well, we don't know why that would be the case. We would see why competitors could be successful, but it's not a zero-sum game. It's not either you're successful or I'm successful. What we have is a marketplace which has always embraced mobile money. It's like 8 years now. They've always embraced it. And if you have more ways of doing it, then of course they'll embrace those as well. So I would say that it's a natural organic growth. Now we've invested a lot. We've got more than 100,000 M-Pesa agents, which incidentally creates a lot of jobs.
Yes.
So 100,000 M-Pesa agents. We've got more and more people using Leap and M-Pesa. And whilst Leap and M-Pesa is not really revenue rich, we don't really make that much money out of it.
But actually, M-Pesa is dilutive on your earnings, isn't it?
It's dilutive at a percentage level.
Okay.
Yeah. So the EBITDA on M-Pesa is lower than the others, and so as that grows, EBITDA percentage will come under strain. So. I think that we just really embedded this in a lot of ways, and so small merchants now using M-Pesa as a much more effective way of conducting their business. Fast-moving consumer good distributors are now using M-Pesa because it's safer, it's more secure, and the money actually gets credited back to their account immediately.
Yes.
Whereas cash doesn't, because cash has to kind of do the rounds and then get back to head office and then get to the bank.
It's very ubiquitous, but you were mentioning something about real-time settlement. Is that on M-Pesa or that was on...
So real-time settlement, what the challenge that merchants used to have is that when they trade with you on M-Pesa, then they have to wait to get to the bank and convert the electronic to real money and stuff. So what we've done is we work with 19 banks now, and there are more and more banks which are coming on board, to allow you as a merchant to settle that real-time to your bank account. So when you get the payment, in real time, that will be credited straight to your bank account. That used to take up to like 2 days.
Wow!
It used to take 2 days, and so we've made that much more fluid.
Mobile data, fastest growing component, isn't it, of the entire portfolio of yours? This enormous uptake, young people embracing technology, wanting this flat world on their phone. The rate of growth, 42.7%, but I noticed a sharp price reduction. You made it cheaper. You talked about democratizing data. This has been a theme of yours. Tell us a bit about what's happening in that space.
I think a big pain point for customers in the past year has been, bill shock and what they call depleting the data bundles, because
we see this on social media in particular.
You see quite a lot, and so what happens is that people get out of bundle.
Yes.
And once you get out of bundle, then the price per MB rises very sharply. So what we've done is we've encouraged people to operate within bundle. We give them notices before the bundle runs out. And so we've seen a lot more people who've moved into bundle. And it's a big difference. It could be as low as, I think as little as 50 cents per MB if you're in the right bundle.
So what is the average bill?
Or it could be 4 shillings if you're out of bundle. So imagine if you're browsing.
Wow, 8 times higher, so you get real sticker shock.
And so that's been a big pain point. And we continue to work in this space. So customers will see some good news in this space as we move forward. And so that's made a big difference, and that's brought the average price per MB down by, I think, 33% or something.
So over the course of the year, but yet revenues went up so dramatically. So that's lots of people coming on the network as well, right?
Yes, it is.
We're
also seeing more people moving on to 4G.
Yes.
And the difference between a 3G customer and a 4G customer is like 3 times.
Wow.
In average revenue for those users. So if you take, if I shift you from your 3G handset to use an individual to a 4G handset, the speed that you get and the consumption will lead to a 3 times increase.
In what I'm also, in a 3 times increase in speed, but a 3 times increase in revenue as well for
Correct.
you?
Yeah.
Wow.
Well, it's not a 3 times increase. I mean, it varies. The
yes,
speed.
but a substantial.
But it's a substantial increase. And a lot of people complain Actually, because what happens is the downloads
Yes.
are much quicker than they expected.
Right.
And so before, if you're watching a YouTube, and typically actually YouTube is about, people don't watch it for more than 2 minutes.
Yes.
And so
the,
you watch,
the average person is watching YouTube for 2 minutes.
It's a little less than 2 minutes.
Yeah.
And so you get a clip, which might be a 3-minute clip.
Yes.
And at 2 minutes, you think, okay, fine, I've got it now. I don't want to watch anymore.
Yeah.
But actually, the whole thing has been downloaded.
Oh,
Because
wow.
with 4G, it's fast.
Yes.
Facebook, automatic downloads of videos, for example, has been happening without people realizing. So we're trying to encourage people to be aware of it,
Yeah.
and to actually deactivate if
Yes.
they don't want it. But we find that if you reduce the price and if you're reasonable and honest with customers, then they'll reward you. Unfortunately, I'm aware that some customers are still concerned because
Yes.
this out-of-bundle thing.
You can't do a flat offer that you're basically on 4G permanently if you want to be, and you just pay a fixed fee a month.
That's a problem.
Yes.
That's a problem because that really does have a hockey stick effect.
Okay,
if you
in
do
terms
this
of usage.
In terms of usage.
Yeah.
And then it degrades the service for everybody else, which
Right,
is the problem.
okay. Bob, if I can just go back to some of the numbers, earnings per share up just under 20%, dividend hiked 18.75%. These are big numbers in an environment where we've had a whole bunch of profits warnings. It's been very difficult. Really tremendous results. What would you say about the earnings per share? Is this rate of increase sustainable, do you think, over the next 24 months? Because you sharply knocked down the EBITDA guidance for next year, right?
EBITDA will be higher next year.
Higher, but you came down from double digits.
Growth.
Yes.
It's coming from double-digit growth.
That's right.
And we don't really want to guide
Yeah.
beyond the guidance we've given today. I think shareholders, I'm hoping, have been happy over the past 5 years with the growth that they've seen.
I think that's the understatement of the year, Mr. Collymore.
We're trying to manage the company prudently.
You have.
And we've also tried to manage our shareholders prudently. So we don't kind of overcook it too much.
No, I mean, an 80% payout ratio is pretty healthy as well, and I'm sure at headquarters they must be equally pleased with you.
But this is headquarters. Actually.
Yes, no, but I mean, yes.
Well, we've got two large shareholders, of course,
yes.
which is the government of Kenya and...
well, they should be happy, first of all, because there's been a story of issues for the government's investments. This has been one of their most successful investments they've ever made.
Yeah, I think it is one of the most successful. The dividend payment for them is the biggest dividend payment they get.
Yeah.
The tax, and I haven't computed exactly how much tax we've paid, but it is the largest taxpayer.
When you look at the all-in contribution, I remember you had that report which talked about the extension of GDP and the actual economic value.
So we're running another KPMG report, which we'll release in another couple of months or so, and so you'll see how that translates into last year's performance. So I would say, I mean, the shareholders are reasonably happy with the performance. And I think they're reasonably happy with the management of the business.
Absolutely.
I'm particularly proud. I must say, I'm particularly proud of the work of the team. The team has done a tremendous job in the past year.
Has that team of yours changed over the years? I mean, do you think you've got the team that you really like right now?
Yeah, I do.
Yeah,
I do. And the team, when I talk about the team, I don't just talk about the.
How many employees are we talking about?
We're talking about 4,700 and something. In all, and they all give their heart and soul. I mean, I'm just so. In fact, I have to say to them, go home. And so we put some rules in place.
Yes.
This is no meetings after 5 o'clock.
Yes. Good
no
idea.
internal meetings on Friday because I think that my team are hardworking and so dedicated to this company that we couldn't have done it with a different team for sure.
Can I leave you with one final question? This tremendous contribution you make to the Kenya government, yet quite often everyone's sort of worrying about you being a dominant player, it seems to me a more political argument, time to put pressure on Safaricom, they're doing too well. My theory is that, we don't have enough companies doing well, and those that are doing well should be promoted for that and congratulated for it. Do you find a dichotomy in the way that, the fact that you're doing so well creates another challenge?
There's an African proverb that says, you don't throw stones at trees that don't bear fruit. And when we were children,
that's right.
We weren't throwing, if you had no fruit, there was no point throwing stones at them. So I think we just got used to it. and we just keep our heads down and we manage our business. There will always be detractors.
Yes.
And we just learn to live with them.
Very proud, Bob. I'm really, I was looking back over the interviews. I know you were looking back to check you had the right tie. I was looking back. I got a new tie, so I'm okay. And I was looking back and I'm thinking that, you know, what a tremendous contribution you've made. I think every shareholder who holds your shares is deeply satisfied with what you've achieved. And I think, you know, from my point of view, it seems to me the organization's at a very exciting point again. More data related in this new economy. Is that how you feel about it?
Yes, you know, we've got people in this business who've been here from day one. We've got 15-year-olds.
Yeah.
And, you know, these people really, really understand the business. We brought new talent to the company to bring new skill sets, so in the financial services sector, for example. And I think, you know, that team is now gelling together pretty well. I'm really proud of how they're working, really proud of their commitment. And, yeah, I think we're in a reasonably good space today.
I think that's an understatement. Bob, congratulations.
Thanks, Eddie.
Thank you.
Appreciate it.
Yeah, thanks.